Now, there are many reasons why real estate investors want to go into the Singapore market. I'll give you 10 reasons why I think they want to go into this market. I'll give you my disadvantages and a conclusion at the end. So here are the 10 major advantages. Number one, Singapore has a very stable government, so you get very little political unrest. Number two, Singapore is one of the safest countries in the world. Very low crime rate. Number three, you have a world-class health and education system. Number four, very important, ease of doing business. So Singapore regularly comes at or near the top for ease of business. And there's very, very little corruption. Number five, other great things are developed infrastructure of Singapore, a competitive workforce, and a very strong rule of law. Number six, mortgages. Now, in general, it is much easier to get a mortgage if you're a foreigner in Singapore than in most other countries. Number seven, high population density. So the high population density and the limited space will ensure, I think, that Singapore house prices will stay high. Number eight, very important, no capital gains tax when you sell your property. Number nine, Singapore has a very, very stable currency. So if we look at the US dollar against the Singapore dollar, 5 years ago it was 1.34, and as of today when this video is being made, it's 1.33, so virtually the same. Very stable currency. Number 10, finally, let's talk about international tourism. So in 2011 there were 13.17 million international tourists going to Singapore. But as of 2019, this had grown to 19.11 million. And before I go to the disadvantages, I actually want to compare Singapore to Hong Kong. Let's call it its rival. Now, in Singapore, property prices are a lot lower than Hong Kong. And this is despite Singapore having higher average wages than Hong Kong, in particular if you exclude expats, and Singapore having a slightly higher population density than Hong Kong, and also a higher GDP per head than Hong Kong. So this would suggest Singapore is a good place to put your money in the real estate market. However, I want to give you some major disadvantages. And the first one, which is not talked about very often, is the very high total government debt to GDP. And this is around the 130% mark, which indeed is actually not a million miles off Italy, which is around 150% to 155%. And it's strange that when we talk about high government debt, we always talk about Italy, Greece, Japan, but we never really talk too much about Singapore. And with this being so high, this would imply taxes may well go up in the future. Number two, although the prices, as I've said, are a lot lower than Hong Kong, they're not that low. I mean, if you take the central area, prices per square meter are more than 20,000 Singapore dollars. So the central area being around Marina Bay, Little India, Chinatown, Orchard District, you know, the main thoroughfare of Singapore. And also in these areas as well, most properties are leasehold, so you're talking about either 99 or 999-year leases. That being said, if you invest in other areas of Singapore, you'll get more money for your dollar. So if you buy in East Singapore, perhaps in the Woodlands, Serangoon, you'll get a much better deal than in the central areas. And what I think very important if you do decide to buy in Singapore is to buy near an MRT station, simply because most people in Singapore do take public transport. But again, I'll repeat, the prices are not low in Singapore. Number three, third disadvantage, is the low gross rental yields. So we're talking on average around 3%. So these are what I call Paris gross yields, not very high. Number four, the low birth rate. So the last figure I have is in 2018, and the birth rate per couple is 1.1. Again, that is on the very, very low side and suggests the population will not grow in the future. Number five, I want to talk about the economy slowing down. Now, granted, Singapore has had an amazing run of growth, And if you take the years 2010 to 2014, the growth range was from 3.94% to 14.53%, which was actually achieved in 2010. But if we take 5 more recent years, 2015 to 2019, the GDP growth range was from 0.73% to 4.34%. And in actual fact, which is a lot lower than the previous 5 years, and the 0.73% happened most recently in 2019. So certainly the economy is slowing down. And again, an economy slowing down is not great for property prices. But number 6, I want to come to the most important aspect, and I think this is the buying costs along with the taxes. So the buying costs mainly entail stamp duty, buyer stamp duty. So this is what you'll pay. On the first 180,000 Singapore dollars, you'll pay 1%. On the second 180,000 Singapore dollars, you'll pay 2%. Now, on the next 640,000 Singapore dollars, you'll pay 3%. And anything above 1 million Singapore dollars, on that portion above 1 million Singapore dollars, you'll pay 4%. But that, I'm afraid, is not the end of it. So if you are a foreigner who's not resident in Singapore, I'm afraid you're going to have to pay an additional buyer stamp duty of 20%. Yes, 20%. And that, for me, is a deal breaker in this market. However, the following 5 nationalities will not have to pay this. So if you're a permanent resident of Switzerland, US, Iceland, Norway or Liechtenstein, you don't have to pay this. So there's a differential between these countries, these and other countries. So let's say if you're a European, I think this is a deal breaker, but not necessarily if you're from the US. Now, just to complete this additional buyer stamp duty, if you are a Singapore citizen or from the US, on the first property, you'll pay 0% additional buyer stamp duty. On the second one, you'll actually pay 12%, and on the third property, you'll pay 15%. So again, I think you're from the US and want to buy in this market, just buy the one property. And if you're a Singapore permanent resident, let's say a foreigner, on the first purchase, you'll pay 5% additional stamp duty, buyer stamp duty, and on the second, third, fourth, etc., you'll pay 15%. Now, on top of these buy-sell fees, there are realtor fees as well. So the buyer will normally pay 1% and the seller 2%, and also factor in, let's say, legal and other expenses, another 1% or so. And the problem, again, as I say, unless you're from the US, Switzerland, Iceland, Norway and Liechtenstein, you're looking at buy-sell costs of nearly 30%. And as I said before, that is a deal breaker, because let's say even if you buy a property, let's say at the higher end, 1 million Singapore dollars, to even get your money back, the property will have to go up by 30% or around 30% just to get your money back. So I think that's a deal breaker. There is also seller stamp duty if you sell within 3 years. And so if you sell within a year, you'll pay 12% seller stamp duty. Between 1 and 2 years, 8%. Between 2 and 3 years, after you've bought, 4%. And again, as I'll repeat, after 3 years, you'll pay no seller stamp duty. And I think this was actually designed so that properties cannot be flipped. I also want to come to property taxes. Now, property taxes are based on your expected rental values. And they're a lot higher if you do not live in the property. So let's say if your expected rental income is 30,000 Singapore dollars, you'll pay a yearly property tax of 10%, so $3,000. On the next 15,000 Singapore dollars, you'll pay 12%, and it keeps going up in scale. So if you're getting the portion above 90,000 Singapore dollars, and you will not get that, but it will be 20%. Now, for a local, this is not the case. They pay a lot lower. So on the first 8,000 Singapore dollars expected rental income, they'd pay 0%, and the next 47,000 Singapore dollars, they'll pay 4%. So in effect, really, if you're living in the property, you are going to pay a lot lower in property taxes. So they discriminate between people who live or who don't live in the property. And then I just want to talk about rental income tax is 22%, but this is after deductions for property tax, repairs, insurance, etc. But it does imply that if you do take property taxes, rental income tax, I already said the gross yield was very low at 3%. So I think net yield, if you take into account potential voids as well, you could be looking at close to 0%, maybe 0.5% net yield, which is not very good. So just one final point, if you are a foreigner and it's difficult to buy land in Singapore unless you get government approval, you have the same rights when you want to buy things like condominiums, apartments, etc., unless they're the ones subsidized by the government, in which case you can't buy those. And it's difficult to buy land unless you can actually prove that you're contributing to the Singapore economy. So what's the conclusion? Well, my conclusion is this: unless you are a permanent resident of Switzerland, US, Iceland, Norway, Liechtenstein, I would actually stay out of this market, because I think the extra 20% buyer stamp duty really is a deal breaker. If, let's say, you're from the US, yes, you could potentially go into this market. If you're risk averse, have a large sum of money that you want to invest, are happy to get relatively low returns and a little bit of potential price growth in the future, but you're particularly risk averse. If you're from the US, Switzerland, and the other 3 countries I mentioned, yeah, you could potentially go into this market, because there are a lot of good things about Singapore. I really do like Singapore. But if you're any other nationality, this market is not for you. Anyway, let me know your thoughts. Please do comment. It'd be great to hear your thoughts on the Singapore real estate market. If you've enjoyed this video, please do click the like button. Please do subscribe to my channel if you do like my channel in general. And I'll see you very soon on the next video. Thank you and bye for today.